We are diving into the South African Reserve Bank, and believe me, its ownership story is not what you expect.
So let me just ask you a quick question. When you picture a nation's central bank, the place that controls the money supply, tweaks interest rates, basically steers the whole economic ship, who do you figure owns it? The government, right? It just has to be.
Well, for most places on Earth, you'd be absolutely right. But South Africa, it's a whole different ballgame. The central bank there isn't owned by the state. Nope, it's owned by regular people and private companies. And that single fact just blows the whole thing wide open, raising a ton of questions about how that could possibly work.
So how on earth does a country's central bank end up in private hands? Well, the whole secret is in its very unique design, and it all begins with how its shares are structured. Let's get into it.
The entire South African Reserve Bank is built on a very specific number of shares. There are exactly 2 million of them. That's it. That number is set in stone. It never changes. So you've got this finite closed pool of ownership.
Now here's where it starts to get really interesting. Each one of those shares has a face value, or what they call a nominal value of just 1 single rand. Yeah, the market price goes up and down a little, but check this out. This is the first big rule to stop any one person from getting too powerful. Nobody can own more than 10,000 shares.
And what about the government itself? You might think they get a special pass, but nope. They don't own any shares by default. They can buy them, sure, just like you or me, but they have to follow the exact same rule. They're also capped at that 10,000 share limit. They're just another potential shareholder, not some big controlling owner. Okay, so this strange setup leads us to the million-dollar question, doesn't it? If private citizens own the bank, are they the ones calling the shots on the economy? Let's figure that out.
This is the real elephant in the room. Does this private ownership mean a small group of wealthy shareholders can dictate monetary policy for an entire country of over 60 million people? Well, the answer is a big, fat no. And it's all thanks to a really clever system of checks and balances.
See, just having shares in your pocket doesn't mean you get a say. If you want to vote at the shareholder meetings, you've got to jump through a few hoops. First, you need at least 200 shares. Second, you have to have owned them for more than 6 months. And third, and this is a big one, you have to actually live in South Africa.
And this, right here, this is the absolute genius of the system. Let's say you go all in and buy the maximum 10,000 shares. Does that make you 10,000 times more powerful? Not even close. Your voting power is capped at a maximum of 200 votes. This design completely shatters the link between how much money you have and how much influence you can wield.
So the whole point of this entire setup is to spread out the power. By putting a hard ceiling on voting rights, the system makes sure that no single rich person or family or company can ever get enough muscle to steer the bank for their own private gain. It's a firewall between ownership and control.
Okay, so if you can't get rich and you can't take control, you're probably asking, why would anyone even want these shares? What's in it for them? Well, that brings us to the shareholders' payday.
Right, so the payout you get is nothing like a normal stock. The Reserve Bank gives shareholders something called a prescribed dividend. All that means is the payout isn't tied to how much profit the bank makes. It's actually fixed by law. The whole idea isn't to make shareholders rich, it's just to give them a small, predictable return. So how much are we talking about? Well, it's capped at a maximum of 10% a year. But, and this is the part you really have to pay attention to, that's 10% of the 1 rand face value, not whatever market price you paid for the share. So let's do the quick math on that. 10% of 1 rand is, you guessed it, 10 cents. That is the absolute most a shareholder can get, before taxes, for each share they own for the entire year. And of course, the taxman has to get his cut. So after the 15% dividend tax gets taken out, what actually ends up in your bank account is just 8.5 cents per share. We're not talking about a get-rich-quick scheme here. It's a very modest, very stable little income stream. So when you start putting all these pieces together, the limited shares, the capped votes, the tiny dividends, you get a picture of something really, really unusual. Let's wrap it all up. What we're looking at here is a fantastic paradox, right? The South African Reserve Bank is this wild mix of competing ideas. It's got the body of a private company, but it's got the soul of a public service. It gives shareholders a platform, but it severely limits their power. And it gives them a financial return, but one that's deliberately kept small by law. So the big takeaway here is this image of a central bank that's literally owned by the public. But at the same time, it's carefully protected from both government interference and private greed. So
Is this unique model a brilliant way to keep a central bank independent and honest? Or is it just a weird, old-fashioned setup from a bygone era? It's a fascinating structure that definitely gives you something to think about.